Yes, welcome back once again, guys. Today we are going to look at inducement. Inducement and where do we find inducement on the charts and how we can trade inducement. Yes, how we can endure the inducement and don't fall into the traps of the market. So, what is inducement at first? Inducement occurs at a specific point or zone in the market where traders believe it is the correct time to enter trade based on their analysis and trading system. So, which is used by central banks and large financial institutions to fall retail traders into their traps. So, when we're talking about inducement, we're talking about the traps in the market. When you think that it's time to buy or sell, and then you enter into the market and boom, you are losing your money. So I'm going to give you a simple structured way of looking at inducement and understanding inducement. If you want to learn more about this trading and everything that I do, you can check out into our link there on our channel, and then you can see everything. Yes, you can join our channel, our Telegram channel, and then you can join our class and mentorship, and then you learn everything. We have a bigger community, and you can learn a lot of things from there. And then you can get into trading and you become profitable for good. So let's get back, guys. When we're talking about the inducement, there are zones that you will think that, for example, if we can see this is a gold chart, and for example here the market was going up, breaking, giving us a BOS, a break of structure, and then what happened? The market came back, and most of people thought that this was another block that they could take a buy from, and it was an inducement. So an inducement is like this. When the market came back, instead it passed through and then only took this other block and moved a little bit. So what happens when the market came and induced many traders? When they entered here, of course your stop loss will be here, and then you think that the market will come back, hit here, and then moves up. Instead, the market passes through and takes all your stop losses. You understand? So this is what happened in the market. Even if you can see here all this last order block, when the market moves back and then came back here, people thought that maybe they could take a buy from here, and instead the market dropped here and then took all this liquidity and then moved up. So this is what happens in the market all the times. So an inducement, if you can watch my recent video about liquidity, it can really help you out to figure out the inducements. So inducements are traps that are set by bigger institutions to trap you into losing your money, into hitting your stop losses. So how do we avoid inducements? It's all about understanding the liquidity zones. For example, this was a liquidity zone, and we could see it. If you really know about liquidity, and if you want really to learn about these things, you can join my mentorship classes and you learn everything from A to Z, and then you will understand. All I give here is just a little bit tap on what I teach. So I just give a little information about that. So when the market came here, it came to take this liquidity, because here was what we call imbalance, and this was the normal order block that we had to take. And now look at this. When the market came, someone was waiting from here to take a buy. Now what happened? First of all, you have to understand the direction of the market. If the market is now really going to a downtrend, you have to understand where do you enter. And we only take sell trades in a downtrend, in a bearish market, and we only take buy trades in a bullish market. So when the market came here again, it took the liquidity. All this money that was here, stop losses that were here, were swept. And also the stop losses for people who had just entered into the trade, had just entered into buy, thinking that the market will just hit here and buys up to there up, were also taken. This last candlestick this week took all the liquidity, all the money from them. So market moved up. So this is one example of what? Inducement. So those ones who trade trend lines will be induced like this. For example, this zone is a trend. The market is in a downtrend here. Market comes, drops, retests here. Market comes, drops, retests here. And then these guys will come back and think that the market will come back to this trend line zone and drops down. Instead, the market passes through the trend line zones, takes out all the liquidity, all the stop losses, retests again, and then again gains momentum to move up. So that's how it works. That's how inducement works. Another example, simple example of inducement, I think you can see here, the market was trending up, breaking higher highs, retesting, breaking higher highs, retesting, and now look at this. What happened? Market broke this last high, leaving what? Leaving an order block here, imbalance was here, and also what? An internal change of character that you can see well. And then instead the market came back, took all this liquidity, tapped into this order block down, and again moved. You see that? So that's what we call inducement. That's what I call inducement. Inducement is when the market traps you, thinking that you're going to take a trade here, and then instead the market breaks that zone, and again after taking all your money, again the market takes that direction that you wanted it to take. So that's a simple way of looking at what? Looking at inducement. So I've been talking about liquidity zones into the other video that I created just over recent. You can check it out and you will see all these zones. You will learn about these zones and you will understand when and where to take the trades. For example, when the market came here, moved up, this was still inducing buyers and sellers. For example, now those people who trade support and resistance, this was resistance, this was support. Now look at this. When the market came here, market came and tapped into the what? The resistance and came back. And those ones who thought that the market will continue again will tap here and move, it came and took all the liquidity that was here with this week. After taking the liquidity with this week, market moved again where? Up. You see what happened? Market moved up. So when market moved up, it tapped into this order block, again dropped. So the market started following its trend line. Market tapped here, again retested, and then started dropping for good. Yeah, that's what I've been talking about real before. So if you really want to join my my mentorship and whatsoever, and even free signals, you can check out in link in my bio, or you can check down. I'm leaving a link there, and also you can contact me on Telegram at SkillsFX. So most of people just join and get to know, get to learn, and get somewhere. So you can learn this and understand everything, each and everything that is here. And it will be simple for you to understand the market, and you crack it down and you get the edge. And what you have to know is that you get to understand and learn discipline, and also you get to know the psychology of the market as well. So let's meet there, guys.